Rushanara, please.
Thank you, and good afternoon. And that takes me neatly back onto the subject of labour market and supply chain. So just on this point, you mentioned 1%. So the long-term impact of COVID is 1%, and the long-term impact of Brexit is 4%. Just to be clear,
more like 3.5. I think we published our estimate in February this year. I think it was 3.25.
3.25. So lower than what we thought last year. I think previously 4% was what was being bandied about.
Well,
but it's still a big difference.
Our focus is on productivity. Yep. Some of the other estimates might include other effects. Both of those effects are comparable as kind of productivity effects, COVID and Brexit.
So thank you. So I've got some questions on labour market and also a couple on climate. So I'm going to rattle through them. Governor, earlier on you said you had some concerns, but we stopped about the labour market and we moved on to other panellists. Could you just talk through what they are? Is it to do with skills mismatch? Is it to do with the lack of supply, labour supply, soon to be, in terms of the right area? What are they?
Well, if it would help, let me give you the example of HGV drivers, because I've been trying to sort of gather up all the sort of candidate explanations for HGV drivers. And I'll give you 7, right? And I'm not, by the way, look, I'm not going to attribute, I'm not qualified to sort of, give you the sort of the truth or otherwise of these, but these are the 7 that, I've heard, our agents have heard, in no particular order. So one is age. And that's relevant because the decline in participation in the labour market has 2 features that are relevant here. One is gender and the other is age. On age, there are 2 groups for whom the decline in participation has been larger, the young and the over 50s. The young, we think, is people who stayed in education. About 500,000 more people in stayed in education. That's quite common in recessions. Over 50s, question mark, of course, about, is this people who've decided to retire early and won't come back. Gender, it's far more men than women have dropped out of participating in the labour market. Now that's relevant because the Haulage Association says the average age of a HGV driver is 55. I'm not attributing direct causation here, but you can see there is there's a story potentially there. So that's 1. 2, number of driving, difficulty of training and doing driving tests.
And that presumably, so you're giving that as an example, because I've got lots of questions. So so we've got HGV drivers, we've got care workers, we've got construction. There's a whole series of areas where there is a gap. So even as people come out of furlough, how much do we expect, in terms of labour shortage and the impact? What's the impact of that on the economy?
I think that the
in
impact,
terms of bouncing back?
I won't go for the other 5, but
I'll run out of my time.
Could you actually, Governor, could I press you just very quickly without giving much of an hour? Because it is quite interesting, actually.
Lack of driving, training and driving for new drivers. Increased demand comes back to the goods and services point. Lots of us are having lots of stuff delivered to our houses in boxes. Not by HGV, but by drivers. 3rd one, Brexit, migration. 4th one, 5, sorry, I can't count my fingers. COVID and migration. Number 6, IR35, which is the change in tax for contracting people who contract to one company. I'm told quite a few HGV drivers are in this. That will. I'm not commenting on the rights and wrongs of IR35. That's not for me to do. But of course, it will reduce post-tax earnings for those who are affected. 7th one, is much harder. But I've heard stories about over the years the decline in payments to drivers for things like overnight parking and so on, and that reduces the attractiveness of the job. So look, those are the 7 candidates. I can't pretend to judge them myself. To your question, though, and this applies to the other. We hear about other occupations as well.
Yeah, and the kind of overall impact on recovery.
I would say this, and I think it's very important that where we can take practical steps to sort things out, we really must do that. So, an obvious one is driving tests. We understand what went wrong with the impact of COVID, but that's clearly something that I would hope we could see real practical solutions that matter for the economy.
Spoken about it. Are they doing enough? Do you feel?
Well, we do talk, obviously, but I can't tell you what's going on. I don't say that in the sense that nothing's going on. But I'm not qualified to comment on what is going on. So that's the... so you had another part of the question.
My question was, if you take those things in the sum, in these multiple challenges, you talked about HGV, but there are other sectors. How are these labour shortage aspects going to impact on recovery? Is it going to be sizable? And you've alluded to what government can do to rectify some of it, but it's not happening fast enough.
I wasn't criticising.
You're not saying that. You're not saying that. I'm saying it could happen faster. Yeah. But what's the overall impact what's the impact of all of this?
So I think, let me come back to the number I gave earlier. If you add up three things, you add up the number of people who are unemployed today relative to the number that was unemployed at the beginning of COVID. You add on to that the number still on furlough, and you add on to that the decline in participation, you get to about 2 million people. That's about 6% of the labour force. So clearly we need that 6% to come back as much as possible, actually, a lot of them to come back, actually. And the question, to your very good question is, well, is it going to happen and how quickly is it going to happen?
And the question is that, do we know whether that, how much do we know about that labour force in terms of their ability to fill the professions that where there are now gaps and
sorry, this is a slightly sort of different answer. If you go to the age point, I think we can say with reasonable confidence that those who've stayed and decided to continue education will come into the labour force. I think it's it's harder to know with the over 50s quite how many are going to say, right, I'm going to come back into the labour force, or how many say, I've had some benefit, let's say, in terms of saving rates, and I will, call it a day. We don't know, I think, is the answer to that question.
Okay. And just on Brexit, what aspect of this? You've talked about the international dimension, but and there's one mention of Brexit in the latest monetary policy report and its impact. But how much of the shortage is related to Brexit? We've heard, there's recently lots of stories about blood tests and concerns about supply chain disruption. And how do we address that?
It's very hard to tell at the moment. And I said also because it's very hard to tell the difference between the impact of COVID on the labour force and the impact of Brexit on the labour force in terms of migration. Because both of them are disrupting movement of people at the border. So we can't, I think, give you an answer to that question.
Should we expect a fuller analysis of this? Obviously for the government it's quite convenient to be able to not separate out COVID from Brexit impacts at the moment, but it would be helpful to understand where the source of problems are, and some of them are clearly, as you said at the beginning,
I'm sure in time,
to do with international supply chain and the impact of COVID, and some of it is not, and we need targeted responses.
I would tell you, we're not experts in migration, but I think it is very hard at the moment to separate those two factors.
Moving on to climate change and net zero and the role of monetary policy. You'll know we've talked about it, and your predecessor, who came in his capacity in his new role, obviously has got a role to play in the Glasgow COP26 summit. In particular, I just want to focus in on the point around the world's biggest banks and their role in financing fossil fuel companies. We've seen apocalyptic scenes this summer, in terms of fires and the added disruption to countries, tourism and so on. What do you hope will come out of the summit, or should come out of the summit, in terms of the role that banking systems can play? Obviously the bank has got a particular remit now. What do you think should happen, given we've got time's running out? The report that came out in August again highlighted major concerns. Would you be able to share
two things I would focus on, which are really our two areas of interest in this? One is that we are currently we're underway with what we're calling an exploratory scenario test. It's not a stress test in that sense. It's exploratory scenarios using climate scenarios, and we're going to run those with the major banks to essentially attempt to sort of what we will, assess and quantify the impact of these climate scenarios on the banks. And there's basically three scenarios. One is that the passage to net zero goes to plan. The second one is it doesn't happen, and the third one is it starts late and is therefore much more disruptive because it has to proceed in a much more faster and more disruptive way. And we will use those, and the banks will use those then to, in a sense, start to sort of, in a sense, quantify and focus on what do you have to do to adjust for the impact of those scenarios on the banks. The second thing I would say is that it's a way into which we need, we all need globally to do a lot more work on the macroeconomic impact of climate change.
Yep.
The second area, which I'll actually bring David on because he's leading on this with colleagues in our markets area, which is that we have a relatively small corporate bond portfolio. We issued a discussion paper early on about how we think we can use that to incentivise the companies to move towards net zero. I think that's important. By the way, the reason, because we obviously had the Extinction Rebellion protests the last 2 weeks, and they focus on why don't you sell these bonds? Well, the reason we don't sell these bonds is because they would probably be bought by somebody, they'd end up with people who weren't interested in transition and wanted to just exploit the assets. So we think the better solution is to incentivise the companies to actually adopt paths to net zero and to then have to be financed to net zero, which is where we come back to the banks as well. But Dave,
very briefly, because this is something where we can actually act. We do have. We were talking earlier about the huge numbers on the bank's balance sheet and in the asset purchase facility overall. Of the 895 billion. Only 20 billion is corporate bonds. So that's like 6% or so of the UK corporate bond market. But we're obviously, as a central bank, we're more influential, and we can use our thinking on this and if you like, our voice to change. Going back to your point to Rushanara, to change and to influence the wider sector. So that discussion paper we published in May, set out principles for how we incentivise companies in order to achieve net zero. The companies we invest in through the corporate bond scheme. But it's quite practical because it set out 4 tools that we can do, setting targets for them, interim targets to make clear we want to invest in companies that are moving towards net zero, eligibility criteria, tilting our portfolio to give a further incentive, and then making clear we will ratchet up our approach to them if they don't change. We've had really fantastic engagement from that discussion paper. From my, not just nationally but internationally, lots of other central banks interested. We're going to be operationalising it, before the end of the year because we've now got our corporate bonds are below the 20 billion. Some have matured, so we're at 19.7 billion at the moment. We're going to have to reinvest, so that's not a large amount in itself. But the signal we will send with that 300 will be a bit more when we come to do it before the end of the year. I think will have really powerful effects on the wider financial sector, but also I think other central banks looking at how we're doing this. We're learning from each other just as they're looking at how we do the stress test. So, and we've had a lot, as Andrew says, we've had an engagement from XR over the last 2 weeks, emailing us about this, and we're engaging with them through the discussion paper, and people will be able to see how we're actually going to operationalise greening the corporate bond scheme as part of greening the financial system.
Thank you. My time's up.
Rushanara, thank you.